Welcome to the deep dive. Today, we're diving into Sansera Engineering. Have you heard of them? Well, they make those tiny but critical parts that make our everyday lives possible. You know, the parts that go in cars, airplanes, even robots. We've got their Q2 earnings call transcript and their investor presentation. And Sansera's doing pretty well. They just hit record quarterly revenue, our $7,634 million.
Wow.
That's a 10% jump from last year.
That's impressive.
Yeah, especially considering how crazy the global economy's been lately.
Yeah, it's pretty remarkable when you think about it. All the supply chain problems and the economic slowdown, it really shows how resilient they are. And they're making smart decisions.
Exactly. It's not just surviving, it's thriving out there. And on top of that, their EBITDA margin, it's up to 17.4%.
Now, that's interesting. That's where their strategy comes in. Remember that QIP they did?
Yeah.
The Qualified Institutional Placement? They basically got a lot of money from big investors. That gives them the cash to go after growth and optimize costs.
And it's working. So, their finances are solid, growth is impressive, but what's really going on? Let's break down their different business segments.
Okay.
Starting with the traditional automotive internal combustion engine business.
Right, the ICE business.
ICE business. It's still doing well.
It is. 9% year-over-year growth, a lot of that, is from the booming two-wheeler market in India. That jumped 21%.
So that shows how personal transportation is changing, especially in a market like India. But then there's the non-auto segment, things like off-road and agricultural equipment.
Yeah, that one took a hit. 20% decline year-over-year. Specifically, weakness in off-road and agriculture. Revenues at ours, $166 million, and ours, $101 million, respectively. For the quarter, looks like those sectors got hit hard.
So some bumps there, but what about the cool stuff? The tech that's shaping the future, like electric vehicles and aerospace.
And that's interesting. Their tech agnostic and XEV segment, the one focused on future tech, is growing the fastest, 53% year-over-year.
53%. Now that's impressive. What's driving that?
It's their innovative lightweight parts for EV battery systems. They're lighter and more durable than traditional designs, giving them a real edge in the EV market. And get this, they haven't even hit peak production yet.
So there's huge potential there.
Huge.
And what about aerospace? Are they really making parts for Airbus aircraft doors?
They are, but their aerospace business did struggle this quarter.
Oh.
One of their big customers had some issues, leading to delays.
Did they say which customer?
They didn't say.
Yeah.
But they did mention a gradual production recovery.
So it sounds temporary.
And overall, demand for aerospace is still strong, right?
Absolutely. Air traffic is growing. There's a backlog of aircraft orders. Even the strike at Boeing is over. All good signs.
Even with that hiccup, Sansera is in a good spot to take advantage of the aerospace boom. And speaking of that, didn't they announce a partnership to make parts for Airbus?
You mean the MOU with Dynamatic Technologies?
Yeah.
Yeah, they're teaming up to make high-precision parts. For Airbus A220 aircraft doors,
it's a big deal.
It is. Think about it. They're going to be part of building Airbus planes. And they're projecting about ours, 53 crores in revenue each year from this project alone, not even counting future expansion.
That's right. It puts them in the Airbus supply chain, opening up tons of possibilities.
And that's just one part of their growth plan. Their order book is over ours, 20 billion.
Wow.
And here's something interesting. 60% of those orders are from outside India.
Really?
Sansera is going global.
Global indeed. They're setting up a new factory in Karnataka and expanding their current ones, all to keep up with demand and make room for new forging lines.
Wow, they're going all in. But expansion isn't their only strategy.
Right. They're focused on new products too, especially high-end parts for the tech-agnostic .CV and non-auto segments. They're not just riding the wave, they're staying ahead of it.
New facilities, new products, and they're entering the U.S. market with a new assembly plant.
Yeah. It's a big move.
It is. They're starting small. And watching U.S. policy, it's like they're testing the waters. But with all this expansion and new ventures, they need a strong team.
You've been working on that. Brought in a new COO.
Yeah.
CHRO.
Yeah.
And CQO, all with lots of experience.
So they're building a dream team.
Yeah.
But there's one more thing that caught my eye. Semiconductors.
Oh, yeah. That's a whole other world.
It is.
They've jumped into the semiconductor equipment business and already have orders from a manufacturer.
We don't know all the details yet, but the timing couldn't be better.
No, it couldn't. Think about the global chip shortage. The demand for semiconductors is huge. Sansera's move is pure brilliance. It could be huge for them.
It's like they have a crystal ball and can see the future of tech, but we'll have to wait to hear more about that in part 2 of our Sansera Deep Dive. Stay tuned to see how deep this rabbit hole goes.
Welcome back to the Deep Dive. Before we jump ahead, let's look closer at Sansera's financials. Numbers are important.
They are.
What stood out to you from their statements?
Any aha moments for our listeners?
Well, one of the first things I noticed was their consistency. Despite the global market, they've maintained good margins.
Can you be more specific? What kind of numbers are we talking about?
Their EBITDA margin for Q2 FY25 held steady at 17.4%. For the first half of the fiscal year, the EBITDA margin is 17.3%, with a PAT margin of 6.8%. This shows they're not just growing, they're doing it profitably. That's key for the long term.
Definitely a good sign. But they're expanding so much, they must be taking on debt.
You're right, they've been investing a lot. As of September 2024, their net debt was Rs. $8,797 million, mostly because of capital expenditures, especially for capacity expansion.
Hold on, what about that QIP they did?
Oh, you remember that? You have a good memory. That's the key. Thanks to that money from the QIP, Sansera's net cash positive right now. This gives them flexibility to keep investing without being weighed down by debt.
So they're in a strong position to pursue those ambitious plans, like U.S. expansion and increasing EV and aerospace production. But let's go back to some of the challenges they mentioned. Their non-auto segment struggled, and there were headwinds in aerospace. How are they addressing that?
Well, they're really focused on cost optimization, streamlining operations and reducing costs.
Can you give our listeners more details? What are they doing?
They didn't go into specifics during the call, but they said some cost-saving measures are working, which is why their margins are stable.
Okay. So we'll see more about those cost-saving efforts later. What about the aerospace challenges?
They think the sector will recover gradually. They're relying on the strong demand for aircraft and their customer fixing their issues.
They sound optimistic.
They do. But remember, they're not just focusing on one thing. Their partnership with Dynamatic Technologies for Airbus A220 parts, for example, they're diversifying their aerospace work so they're not dependent on one customer.
Smart move. Especially these days, it seems like they're thinking ahead. But here's a thought. With all this expansion and new products, can their current workforce keep up?
Good question. It seems Sansera knows this. They've been expanding their team, bringing leaders with decades of experience in manufacturing and engineering.
So they're investing in their people just as much as in facilities and tech.
Right.
They're building a team, not just machines. And that's key for long-term success.
Exactly.
So we've covered their financials, their plans for challenges, and their investment in people. But what about their overall strategy? Is it realistic? Can they keep this up?
Based on what we've seen, they have a good plan. They're focused on the right markets, EVs and aerospace. They're making partnerships. They have good expansion plans. And they're investing in their people. It's all positive.
I agree. It seems like they're doing great. But every business has risks. What should our listeners keep in mind?
That's important. Sansera has a lot going for them. But external factors could be a problem, like the global economy, changes in government policy, or problems in the supply chain.
So they're not immune to the global situation.
No, they're not. But they've been resilient and adaptable. Their performance shows that.
I'm impressed. They're in so many sectors. ICEs, EVs, aerospace, even semiconductors. They want it all.
That might be their strength. They're not reliant on just one market. They can go where the growth is.
So what do you think? Should listeners be bullish on Sansera?
Based on everything we know, from their calls and presentations, I'd say yes. Sansera has what it takes to succeed. They're a company to watch.
That's a strong endorsement. They have the money, the strategy, the team, and the ambition to really change manufacturing. But there's one thing we haven't discussed yet.
What's that?
Semiconductors.
Right. That's for part 3.
Exactly. Of our Sansera Deep Dive, we'll look at this new venture and what it means for their future. Stay tuned. The best is yet to come.
Welcome back to the Deep Dive. We're in the final stretch of our exploration of Sansera Engineering. You won't want to miss this. We've learned a lot. Record revenue, new markets like EVs and aerospace, solid financials, and their great team.
But remember,
Yeah.
that cliffhanger.
Yeah.
Semiconductors. This is where it gets really interesting. It shows how Sansera is adapting to the changing world of tech. But what does it mean to be in the semiconductor business? They're good at making parts, but are they doing the same thing for chip makers?
It's not super clear. They mentioned orders from a manufacturer, but we don't know the details yet.
A little mystery is always good. But the semiconductor industry is booming.
It is.
The global chip shortage showed us how important chips are. Our phones, laptops, cars, even fridges. Everything needs chips.
And the demand keeps growing.
With AI, the Internet of Things, all these advancements, the world needs more chips than ever.
That's what makes this so interesting. Sansera is a part of this growth.
They're ahead of the curve. But how does this fit their strategy? We talked about EVs, aerospace, tech-agnostic parts. Where do semiconductors fit in?
Well, chips are the backbone of all those industries. EVs use them for power.
Driver assistance, entertainment.
Aerospace needs them for navigation.
Communication, flight control.
Even tech-agnostic parts probably use chips.
So it's all connected.
Exactly. By supplying equipment, they're enabling the industries they're already in.
Smart. They're not just following trends, they're thinking ahead. But entering a new market's tough.
It is.
What challenges might they face in semiconductors?
It's a complex industry. You need special knowledge, advanced tech, understanding of global supply chains. It's not easy to get in.
Not a walk in the park.
No.
But Sansera is innovative, they like challenges, and they've been adding experts to their team.
True. And they're willing to invest.
So challenges, yes. But don't underestimate them.
I agree.
We've followed Sansera's journey from their start to their global presence. They've exceeded expectations, adapted to markets, and positioned themselves for growth.
It's inspiring.
But let's recap. What are the key takeaways?
Sansera has been resilient. They're focused on growing markets. They're investing in their people and tech, and they have global ambitions.
Excellent points. But before we go, I want to leave you with something to think about. Sansera is not just making parts. They're building the future of mobility. They're in your cars, maybe even planes. And now they're in the chips that power our world. So here's my question. What does Sansera's success tell us about the future of Indian manufacturing on a global scale?
That's a good question.
That's all the time we have. For our Sansera Engineering Deep Dive, we hope you enjoyed it. Knowledge is power, and we're here to help you unlock it.
Keep exploring. Keep asking questions. Keep diving deep.
See you on the next Deep Dive